Hello, my dear students. Hope you all are safe and healthy. Handling the present situation, you all are going good with your studies. Indeed, you all are doing an appreciable work. Still, just want to say that maintain this regularly, even make it as your routine. With this, today I am going little ahead with the adjustment entries and its effects. Let me start. Okay, students, today I am going to discuss some adjustment related to goods. In that first is, I have mentioned the number in the regular sequence. In the previous session, I have completed total 9 adjustments. So in that way, the next adjustment number is 10. For unrecorded credit purchase, very simple. The credit purchase is not recorded, and that's why we have to record it. So adjustment entry, it is simple. The credit purchase entry, purchase account debit as goods comes in to creditors account because creditors are the giver of the goods. On the basis of that adjustment effect, the debit effect is as the purchase account debit, so trading account debit side plus in the purchase, and creditors are suppliers, so credit the giver, that's why to creditors account. So credit effect is balance sheet liability side under the head current liabilities plus in creditors. The next point is unrecorded credit sales. So let me record it. To record unrecorded credit sale, we have to first pass the entry for credit sales. And the entry is due to credit sales, debtors are the receiver. So debit the receiver, that's why debtors account debit. And goods goes out, so credit what goes out, so to sales account. With that, the debit effect is balance sheet assets side plus in debtors under the head current assets, and the credit effect is trading account credit side plus in sales. Similarly, unrecorded credit purchase return. So as it is unrecorded, so we have to record it. So the entry for purchase return is creditors account debit. Why the creditors are debited? Because goods are returned to them, that's why creditors are receiver. One more reason for debiting the creditors account is that due to purchase return, now the payable amount gets reduced, and that's why creditors account is debited. And as goods goes out, credit what goes out, that's why to purchase return account. With that, the adjustment effects, debit effect is balance sheet liability side minus from creditors. By deducting the creditors, we will get the net amount payable to creditors. And the credit effect is trading account debit side minus from purchase account. Next, unrecorded credit sales return. Similarly, like unrecorded purchase return, now we have unrecorded credit sales return. So we have to record it. So we have to simply pass the entry for credit sales return. Due to sales return, sold goods comes back to the business, that's why goods comes in. So debit what comes in by following that rule, sales return account debit. Debtors are the supplier, or we can say giver of that return goods, that's why credit the giver to debtors account. With that, the debit effect of the given adjustment is trading account credit side minus from sales. Sales return is deducted from sales. And the credit effect is balance sheet assets side minus from debtors under the head current assets. So why we credit the debtors account? By crediting debtors account, we will get the net amount receivable from the debtors. Because due to sales return, now the amount of the sales return will not be received from the debtors because they have returned the goods. And that's why to show that reduction, the debtors account gets credited. Now the next point is purchase return recorded to sales book. So now this is the point where the rectification entry is required. Something wrong happened, so we have to rectify it. So what is there? Purchase return. So actually it is purchase return, but this purchase return is recorded to sales book. That means it is recorded as credit sales. So for that, first we need to understand correct entry, wrong entry, and then after rectification entry. So correct entry is what? about the purchase return, and the entry for purchase return is creditors account debit to purchase return account. But it is recorded to sales book, that means it is recorded as credit sales. So wrong entry is mentioned with the yellow font. So wrong entry is what? Debtors account debit to sales, that means it is recorded as credit sales. So on the basis of this wrong entry, we have to frame the rectification entry. So the rectification entry is sales account debit to debtors account. So we have to give effects for the correct entry and the rectification entry. This wrong entry is for your understanding. So with that adjustment effect, we have total 4 adjustment effects. But when we convert it into accounting terms, then we have 2 debit effects and 2 credit effects, because adjustment effect always and always are 2. 2 adjustment effects are there. One is debit effect and another one is credit effect. So with debit effect, creditors account debit, so balance sheet liability side minus from creditors. Why? Because here there is purchase return, so that the amount of creditors gets reduced, so that we will get net final payable amount to creditors. So first debit effect, balance sheet liability side minus from creditors. And another debit effect is trading account credit side minus from sales, because here sales is debited. Sales generally is credited, but here we have rectified the entry, that's why sales account debit. So trading account credit side minus from sales, because this amount is wrongly included in sales, that's why. Now credit effects. In the first correct entry, the credit account is to purchase return account. So first credit effect is trading account debit side minus from purchase. So purchase return is always deducted from the purchase, that's why trading account debit side minus from purchase. And with the rectification entry, the credit effect is given to debtors account. So to debtors account, balance sheet asset side minus from debtors, because it is wrongly included in debtors. Next, it is sales return. Now the sales return recorded to purchase book. So correct is what? Sales return. But it is wrongly recorded to purchase book, that means it is recorded as a credit purchase. Again we have to move with correct entries. Then after wrong entry, and on the basis of wrong entry, we have to frame rectification entry. So correct entry is what? It is the transaction of sales return. So entry for sales return account debit as goods comes in to debtors account, because debtors are giver. It is recorded to purchase book, that means it is recorded as credit purchase. So wrong entry is the wrong recording is done with the credit purchase entry, purchase account debit to creditors account. But as it is a wrong entry, that's why we have to rectify. So rectification entry is creditors account debit to purchase account. So now we have to give effects for the correct entry and the rectification entries. And with that, adjustment effects are first debit effects, trading account credit side minus from sales, because it is sales return. Another debit effect, balance sheet liability side minus from creditors, because it is wrongly included in creditors. Then after credit effects, in the first correct entry, credit effect is given to debtors account. So balance sheet asset side minus from debtors, because it is sales return. So with that, the amount of debtors gets reduced. And the another credit effect is trading account debit side minus from purchase, because this purchase is wrongly recorded, that's why minus from purchase. The next point is credit purchase recorded to sales book. It means the correct is what? Credit purchase. This credit purchase transaction is wrongly recorded in sales book, that means it is recorded as credit sales. Again we have to move in the same process. First we have to frame the correct entry. So entry for credit purchase, purchase account debit to creditors account. Wrongly recorded as credit sales. So entry is debtors account debit to sales account. Rectify this entry. So rectification entry is sales account debit to debtors account. And with that we have adjustment effects. First is the debit effect, purchase account debit, trading account debit side plus in purchase. Sales account debit, trading account credit side minus from sales. credit effects, to creditors account. So balance sheet liability side plus in creditors and to debtors account in rectification entry. So balance sheet asset side minus from debtors. The next is credit sales recorded to purchase book. Now here it is what? Credit sales, and it is recorded as a credit purchase. Again with the same process. First of all, correct entry of the credit sales, debtors account debit to sales account. But it is wrongly recorded in purchase book. That means it is recorded as credit purchase. So entry for credit purchase is purchase account debit to creditors account. But this is the wrong entry. That's why we have to rectify it. So rectification entry is creditors account debit to purchase account. And with that, the adjustment effects of the correct entry and rectification entry is, first two debit effects are there. Debtors account debit, it means balance sheet asset side plus in debtors. Creditors account debit means balance sheet liability side minus from creditors. Because wrongly included, wrongly recorded, it is as credit purchase. Then credit effects, in that first to sales account, trading account credit side plus in sales, and to purchase account, trading account debit side minus from purchase, because it is wrongly included in purchase. So these are the few adjustment related to goods. You may find the adjustment, for example, goods withdrawn for personal use is wrongly recorded as a credit sales. So this kind of transaction you may find, and accordingly you have to move with the correct entry, then frame the wrong entry and on the basis of wrong entry you have to frame rectification entry. So go through the video again, understand today's discussed adjustments, its entries and its effects, and then after go through the textbook and try to understand the given discussed adjustments which are over there. Thank you so much.